Hi, this is Charles Kelly, just at the gym today on Friday morning, and it's a beautiful sunny day here in London, but freezing cold. Now there is some good news on the horizon in that inflation has come down recently and the economy seems to be settling. There was slight growth in the UK economy in the last couple of months, but we're still very much in recession, and just because inflation has come down below 10%, it doesn't mean that prices will necessarily go down. It just means that they will not be rising as fast as they were in the last year, and that still means that people are behind because wages are not keeping up with inflation. Employers can't always afford to give an inflation linked pay rise, and certainly in the public sector workers, the governments, the nurses, the teachers, all those sorts of people, that they are striking now for higher pay. Of course, if you get higher pay rises, that means that you're going to see more inflation because the government has to find that money to pay them. And half the people in the country are employed by the state in one way or another, obviously funded by taxpayers. Okay, other good news that's happened recently is that the Making Tax Digital proposals by the Revenue have been postponed for a year or two. They probably won't come in until 25, 26, and that means that the landlords won't need to report quarterly their tax returns, and self-employed people as well. So that obviously is a bit of a relief for people who are worried about that. Other bit of good news is that wholesale gas prices have come down and oil prices have come down. So we're already seeing in the pumps now price of litres per, this is in the UK, of unleaded going down as low as 140. I can get it at Costco's even cheaper than that. Costco's probably the cheapest place in the country at the moment, worth paying the membership just to get the fuel. But gas prices and electricity prices have not changed because they tend to be a longer term, or so they say. They bought all their gas in ahead of time, and just because the international wholesale prices have come down, they can't pass that on immediately. But it seems to me that bills will come down this year, which will be a relief because the government support will end in March. These rebates that people have been getting, but at least I think, big fingers crossed, that we'll see lower fuel prices coming up this year, because a lot of businesses have suffered badly and some had to close down because they just can't afford the bills. So that's it would be a welcome relief if these prices come down. So if you've got any other good news, you could tell me what's going on in the economy. Do let me know. Property prices are still obviously coming down month on month, but does that mean you have to put off buying a property? Well, not necessarily. I would be cautious if I was investing in a project where you're going to flip it or a doer-upper and sell it on at a higher price. I'd be a bit nervous about that. But if you're buying for something, say, to live in, it's your forever home, for instance, then why not sort of go ahead with it? Because if you've got the deal now, you've got the mortgage now that you might not get in the future, then go for it. If you can afford to wait, I think interest rates will come down this year at some stage, or will certainly start to settle down. Mortgage rates have already fallen slightly since the mini-budget crisis. So if you can afford to wait, why not? But if you've got the home that you want now, you've been looking around and you found it and you've got a good deal on it, does it really make any difference whether it goes down by 5% next year or this year? Not really. If you're living in the home, you're getting the benefit of that property. It's not an investment, it's somewhere to live. And if you're renting a property out, you also get in the cash flow, the income from it. So it doesn't really matter if prices are going up, down or sideways. In some ways, no, but of course, as an investor, you want to buy at the right price. The profit is made when you buy, not when you sell. That's the old saying. There are other old sayings like, don't wait to buy property and wait. But I'd still wait a little bit longer if you're an investor right now, because I think there'll be properties coming on the market cheap. I was speaking to an auctioneer guy yesterday, and he said the last two auctions they held, were pretty tough. Not everything's sold. There was stuff unsold. Also, people are failing to complete, so they're exchanging at auction. They're not coming up with the money to complete. That means they lose their deposit, and then investors with cash then slip in and put in an offer and get the property a little bit cheaper. So there's opportunities like that out there, and I think there'll be more in the future. So if you can afford to wait, then wait to buy property rather than buy property and wait, especially if you've got cash available or you can raise money other ways. So that's just a little bit of snippets of what's going on. You don't hear that in the news because these are anecdotal things that you hear by speaking to agents, by speaking to auction companies, and you can go onto auction sites, you can look at auctions live, and then you can say, well, what has sold, what has not sold. It's interesting to watch an auction because you can see whether the prices, the bids reach the reserve bid. So if somebody puts in a property for 100,000 reserve, the guide price might be 90 or 80, but they're not going to sell it for that. They set their reserve at 100. So if you see the bids coming in and they're not making 100, you'll hear the auctioneer saying, well, I need a bit more than that. And then when it hits 100, he'll say, yes, it's in the room, this property, and then you know that it's reached the reserve. And then things start getting a bit serious. But if it doesn't reach the reserve, he just says, well, sorry, I can't sell it for that price, and speak to us afterwards, and then you can put in offers after the auction. So if you see that going on, you know that things are not reaching their prices. Whereas, a year or two ago, I was watching auctions and the prices were just going through the roof. It was going crazy. People were paying what I thought of at the time ridiculous amounts for properties, because even after you fix up an old dilapidated property, it would be worth about the same as you could have bought that property on the street that had already been done. So there's no profit in it. So anyway, that's just a bit about property auctions and that sort of thing. If you've got any comments you'd like to make about what your experience in property is, please make them below. I'll be happy to hear that. Also happy to hear comments about my podcast, anything you'd like me to talk about, for instance. A lot of people are asking me about, should I buy now, should I wait? Well, I think I've answered that one. And other people say, what about the stock market? I think stock markets have already gone down last year, had a bad year last year, and I think they could go down further. People like Harry Dent are predicting, an 80-90% crash this year, the crash of a lifetime, he calls it. So he's advising everyone to get out of stocks, get out of stocks, get get into bonds, Well, bonds are going down as well, so what do you get into? Then there's gold, the gold buffs who say, get out of everything and put your money in gold. It's okay having a bit of gold. I wouldn't necessarily put all my money into gold, but certainly having a bit of money in gold is a useful hedge against inflation. There are problems with buying gold and silver, the physical stuff, in that you've got a problem with storage. What do you do with it? If you get $10,000 worth of gold, there'll be a few coins, but it's easy to lose coins. It's easy to lose, 5 or 6 gold coins. Where do you hide them? If you buy a similar amount in silver, then it's going to come in a big box and it's going to be really heavy. And what do you do with that? Do you hide it in the loft? Do you hide it under the floorboards? If you put it into a bank vault, a safety deposit box, like they've got in Metro Bank in the UK, that's going to cost you $20, $30 a month, even a small one. So that's a cost, isn't it? So $300 a year, that's over 10 years, that's £3,000 just in storage. And if you do keep it at home, is it insured? Have you told your insurance company? Because a lot of people have home insurance and they think, well, I've got $50,000 or pounds of cover. But if you are also at that time holding in the household, out of that 50,000, you've got 20 or 30,000 pounds or dollars worth of gold and jewellery, and you haven't informed the insurance company, that's not going to be really covered. If that gets stolen, they're going to say, well, no, you didn't tell us you've got that much of valuable goods or high-risk items. Because when a thief comes into your house, he's not going to take your sofa and your carpets. He's going to go for the stuff that they can immediately turn into cash, like your silver and gold and that sort of thing, your jewellery. So you've got to be careful of that as well. If you do hold a lot of valuables in your property, make sure you've correctly insured them. But there is another way. You can buy gold bullion, gold coins and bullion and silver on markets where you can buy it online. You can take delivery if you want, but you can also store it in their facility. One of the facilities I deal with is Vaulted. They're a Canadian company, and they will sell you the gold coins as much as you want for fairly small amounts even, and then they can store it in their facility safely. But there are other companies that do this, and obviously if you're only buying a few £100 worth of coins, then it's not worth it. But if you're buying several £1,000s worth of gold or silver, then it's worth looking into this facility, because it can enable you to store these things safely, not have to have them in your house, not have the liability of it, and also when you sell it, you don't have to deliver it anywhere. You can just go online and sell it at the prevailing price at that time. So it makes it very easy. It takes the hassle out of it, really. So have a look. I'll put a link up to Vaulted. You can have a look at that and for yourself and make up your own mind. But as I say, I wouldn't necessarily, like some of these gold buffs, want to put all their money in gold. Put in gold. And normally you find they're involved in selling gold, so they're not really giving impartial advice, if you know what I mean. And gold does well over the long term. It doesn't always do well. There's a risk there as well. It can go down. It can be volatile, the price of silver and that sort of thing. But I think precious metals in the long run will be okay. There are disadvantages with gold and silver. You don't get an income from it, for instance. So it's not like a property. You put your money into property, you get a return, you get an income. You put money into stocks and shares or a fund, you'll get dividends. That's income, that's cash flow. You're not going to really get that from gold unless you're lending it out in some way, I don't know. But just think about that. So have a look at that link. Finally, next week I'm doing a live webinar talking about money, talking about investing, managing your money, putting your money to work, getting control of your finances. And I've got a free webinar training this coming Wednesday at 7:30. So please join me if you can. I'll put a link up to that as well. And I'll see you there. I'll take you through some really good training for free to help you immediately get control of your money within 28 days and start to build real wealth. It's not a get-rich-quick. It's a process of building wealth, but it's not going to take a whole lifetime. And once you become educated in money, then you can make more informed decisions and better decisions rather than just listening to a financial advisor. I'm nothing against financial advisors, but you should know as much as them in some ways, or just listening to a TV ad that says buy gold, or some buff on YouTube that says buy crypto and that sort of thing. Become educated first, and then you can make the right informed decision. In my 25 years as a financial advisor, most people are not educated on money. So that's the key thing, is to get educated, and that's why I'm running this free training next Wednesday at 7:30. So I'll see you then. Bye for now.